I think it's really important to accentuate what you said about knowing the space a little bit, knowing clients, because I find the more we know about a certain sector, the more breadth we have about a sector, the easier it is to understand someone's business model. And if we're comparing people, around adjacent sectors, it gives us ability to mix and match lessons learned from other areas to help a client think through things that they're doing in a way that might not be obvious to them, right? Like I spend all my time talking with investors and different types of sources of capital across the board. Founders probably spend some part of their days, but they don't spend, all day, every day thinking about those issues. By that way, we can bring our expertise to the table. And I think your comment about how you guys do that as not broad generalists, but more specific is really, 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 really valuable there. Would you agree with that?
Yeah, I'd say there's another area of specialization and exposure is that we work with earlier stage companies than most investment banks do. So we are working often with Series A, seed to B, I'll say, companies. So often, not always, but often venture-backed companies that are a traditional investment bank wouldn't touch, frankly, for a number of reasons, either size or just the financial profile of the company. So I think because of our familiarity and networks in those space, we're finding that we can tell the story in a really compelling way, in a way that lines up with what venture finance um, is interested in and wants to see. And we understand the kind of history of the company better because it is its own world, right? Its own particular kind of financing.
Sure. I mean, makes another really good point. How do you define an exit for a company of this stage? People talk about them, but they don't really talk about exactly what they mean. And we're dealing with a lot of smart people. They are accomplished in their fields. They're extremely knowledgeable. Why do they need an investment bank to navigate this part of their business life?
Yeah, I really appreciate you asking that question because I think it's a little bit like buying or selling a house if you have the privilege and ability to do that, right? It's for many of us as an individual in an individual basis, it's the biggest financial transaction you will ever undertake in your life, and you usually do it once. It's really helpful to have help from folks who do it every day. So it's not that you're not able probably to do it on your own, but there's lots of kind of tips and tricks and habits and things to look for that really only come with reps. So um, M&A and investment bank, I'll say, has plenty of craft, but a lot of it is experience. It's not that it's rocket science. It's just a big project with a lot of moving pieces that can be very time intensive, particularly for a founder executive. Often their day plus job is running the business. So running this additional process um, can be really onerous and really taxing. And I think folks will appreciate that from anyone who's done any venture fundraising, right? It essentially eats up all your time, and especially these days for months and months. A sale process is like an amplified version of that, right? It's longer, sometimes it's higher stakes, like it's very similar in some ways, except the diligence is way more um, extreme. So the front half of it's kind of similar, and the back half is like another level of detailed scrutiny.
Yeah, that's really interesting. Let me just double click on that a little bit because, I mean, let's say someone says, "I you know what, I never really thought about that. That's really interesting, Claire. How do I decide who is a great partner for me as an investment bank? How would you say that you choose clients or clients choose you so that we make sure that there's a good fit?"
Hmm. There's absolutely some chemistry components, as I imagine is the case with you, Phil, right? Like there are a number of folks who can help companies with their strategic financial questions, but it really helps if you get along with the person who's doing this, right? It's not just a technical component. There's a moral and values piece to it and a way of working component of it that are important. Um, in our case, and similar to you, right, we are literally helping our clients with something that's often existential for their company. So there's a lot of trust involved. They need to know that we take them seriously. We care about their business. We're going to do our utmost to get them the best possible options. Sometimes those are really excellent options, and sometimes they're not great options, but they're better than what they'd have without us, which, for a couple of companies, it would be a bankruptcy, or sometimes it's a really punitive pay to play rounds. Like right now is a really tough period for venture backed businesses. So trust is a really big piece, and we want to get to know our clients too, right? Like our compensation is aligned, very aligned with our clients, and we really strive to do that. And that we are almost entirely, it's like 90+% we're paid on whether a transaction happens. So we have no interest in running out the process, right? And in taking you for a ride. We want the outcome to be as positive as possible for you, because that's how it is, how it becomes positive for us. So there's a really trust component there from both ends, right? We need to believe that if we bring you a good deal, you will take it seriously, because otherwise we don't get paid for the work that we've done before. Another way, I do think this industry sector, horizontal specialization piece is relevant, because that we're mission aligned. I think most folks who work in climate are here not only because they want to build great businesses, which is no small thing, but also because they want to have an impact on the climate and the planet. And that's absolutely something that my partners and I expect everyone we bring on the team will really share. Like, that's meaningful and important, and I think worth spending a lot of our best hours and times on. So I think that mission alignment piece is crucial, and our focus is a way of illustrating that commitment on our end.
Yeah, I could totally get that. So just a last question on exits before we circle back a little bit to talking a little bit more about you and like what drives you to do this work. But when I first started this, I heard exits and I thought, oh, that just means like IPOs, right? Big company pop, right? Then I was trying to understand M&A and the different components of it. Do you think that there is a metric or a rubric around like how you can help people or determine how they can get to a right exit? Because there are different types of exits. There's like, there's an acqui-hire, there's a transfer of assets, there's probably a number of others that I don't even know about. Like, how do you work with people to say what the breadth of the options are, how much more likely they are to get something by working with somebody who's been through the process a number of times like you guys have versus somebody who's doing it for the first time? Can you speak to that a little bit?
So as I said, we really pride ourselves on trying to do the best possible thing for our client. Ideally, this also benefits us, right? But even if it doesn't, that is the commitment we have and the approach we take. So we have absolutely spoken with prospects where we think, look, we could help take your company out to market and probably help you sell it, but we don't think that's the best option for you, and here's why. Certainly with the change in the administration this year, the window, or at least the backdrop for certain companies, has really changed for an exit, right? We sold a couple companies last year that I think we'd have a harder time selling now, or it'd be at a much less favorable valuation. One of those in particular was a company that still had a good bit of runway, was run by an enthusiastic and pretty young team who hadn't been at it that long, and I think still had a lot of energy for it. So our recommendation to them was, if they were up for it, that they should pivot and try to kind of find a new place for themselves in the setup. Like, yes, we probably could have taken their company out and sold it, but we didn't feel that was the best outcome for them and their investors if they were willing to give it another crack. And I believe that's what they're doing. So that's more a point to say, like, we want to be creating the best options you have for you to choose from. And if one of them isn't working with us, then we'll encourage you to pursue that. There was another question, sorry, that I've forgotten now.
Well, it's just actually a follow-on to this one, because I love where you've gone. One of the things I learned from our conversations was, everybody talks about starting with the end in mind, but not a lot of times do people actually talk about what the end is like for current companies in their sectors, so they can speculate what it could be 2, 3, 4 years down the road. And that's changed my conversation with early stage companies, because now I say to them, when they say, Phil, how much money should we raise? I say, you should raise enough money to run for 24 months. And they say, why? And I say, well, when you get the money, you need to work like hell for 12 months to really prove what you're going to do. And at that point, you got to stop and say, do I need to raise more capital? Because it's going to take me 3 to 6 months to raise the capital. And if I get to that point where I'm not, then I need to say, well, how am I going to exit this company or pivot? Because it's going to take me 3 to 6 months to get it sold, right? Or to get to some sort of an exit, so I don't crash while I'm en route to my next destination and run out of gas. Yep. So the question that actually evolves to me is, you look at a lot of people who are at that spot where they go, I got to land this plane somewhere. And in what often what you just said, there's a mix of people who are like, you know what? Actually, if you divert to this airport and take a different strategy on your business, you can refuel and go in a different way to actually get into that destination you want to get to. Do you have a feel for like what the mix is when sometimes people are thinking they're going to crash and burn it? Actually, they're not.
The one that folks are familiar with around here is another fundraise, right? And to some extent, we can help with cap raises. We found in the venture world, investors see the ability to fundraise as a very strong proxy for the founder exec to sell to customers, current and future employees, partners, et cetera. So we can advise on the strategy and the messaging, but the pitching really needs to be done by the founder. So I don't consider that an exit, right? But that's sort of on the spectrum. The sort of interim version is something that looks more like private equity. So it's probably a majority stake that's taken by an investor who is going to put more capital in your business, but also have clear expectations or at least a desire of where they want that business to go. That's certainly something we can help with. Most of what we do is full strategic sales. So the complete sale of your business to typically a large corporate. And that has some similarities in that often there's an earnout involved, right? Like part of how your company is valued is based on its future revenue potential. And they are going to want you to have some skin in the game as a founder exec, right? They'll say, well, part of the money you'll get once you actually hit those milestones. There's a final option here, which you alluded to, which is something more like an acqui-hire or maybe a merger of equals. And we've seen those happen, right? Where there's two or a couple of competitors in an industry, and one of them's either running out of gas or kind of struggling, or they're finding there isn't quite enough space for both of them, and it makes sense for them to sync up. Those look more like stock deals. There's usually not a ton of cash involved. Certainly something we can help broker, not something we've done yet, but we know happens, and I think it makes sense to have an advisor kind of on your side to make that case. We're often not the best party to lead that. I think we're always happy to make introductions and put typically a founder right in front of folks who would be a good fit to bring them on and might want to bring on their tech as well. But there is because it's so focused on the individual and a little bit less on a business around them, that's less of a comfortable spot for us to play in, and often we're much less needed and less useful.
Okay. I definitely want to ask this question. I know it's a little outside of your area of focus, but you mentioned the private equity person coming in for majority stake. And I've seen a lot of that, right? Seen a lot of that, whether they're family offices, whether they're high net worth, but all types of investors. They say, well, I'm going to give you X amount of capital. You're not going to crash. And they're like, yay. And they're like, but you're going to give up a majority of your company. And they're like, oh, how does a founder, how prevalent is that? And it seems like a standard. How should a founder think about that as one of the realistic options that they're just going to have to deal with if they're at month 16, 18, and they're looking at where they got to land the plane? How would you comment on that?
We have a healthy conversation going with a prospect who is very clear on this being a good option for his company. He's like, we've built something really interesting. It's pretty unique. We're doing it better than everyone else. And it makes most sense as a feature on a bigger platform than it does as a standalone. So he's like, either we need to go raise $1 billion and build the whole platform, or we get acquired by one of those platforms and we're their awesome feature. Right? He's really clear on that. He's actually not the founder. He's a CEO that's been brought in a little bit more recently, and I think has really helped transform the company. So some folks are really clear about that, right? They really, those start up maybe as partnerships or integrations, and then you realize that it's probably worth examining a deeper integration, and that everyone would do better with this because your clients are all the same and you're serving like completely adjacent needs. I guess the one I just described looks more like an acquisition, but I think that's what it could be like, right? Some of those companies we've seen a lot in the kind of supply chain tracking monitoring space. A lot of those are now large tech companies that are PE backed, and all the term of the art, I suppose, is tuck-ins. Like all those additional acquisitions are essentially spearheaded by a party within the investor. Not, that person doesn't sit within the company anymore. They sit on the private equity company's payroll.
That's really cool. That's really insightful, actually. I enjoyed when we have an opportunity to learn and dig into something that I think can be really interesting and really, really helpful, but it's also expands my thinking on the topic at the same time. So thanks a lot for that. I want to circle back to really talking a little bit more about you because people always want to know who's the person that I'm dealing with and why
Mhm.
they're here and what motivates them. So can you talk a little bit about our favorite subject, about Claire? Like, why do you do this? What drew you into this and what does success look like for you in doing this work?
Yeah, sure. Um, I do wish my partners were here because they have great stories too, but maybe they can be future guests. And we all have pretty different stories, but I think that's part of why we're a good team is that we come to this with really different experiences that we're finding very complementary and that really help us serve our clients better and do a better job. So I'll tell mine, but I think it's worth hearing theirs because the mosaic is pretty powerful. Um, I've been in this business and sustainability world for a really long time. I think I'm pushing 20 years. It's really the only space I've worked in. It's a space that's gotten very broad, so that isn't necessarily saying much, but I've only ever been on some kind of impact team or role. I started out as an analyst at what are now the large incumbent ESG rating agencies, when that was a pretty fragmented and global industry.
Hmm?
And that space went through quite a few acquisitions, mergers, a lot of consolidation about 15 or 20 years ago. So I think in the space of 4 or 5 years, I had two jobs, but like five employers because they kept acquiring each other. Um, Eventually, so I started with the rating agencies. Eventually, I was like, wait, I need to understand more about fundamental investing because that's really what we're trying to um, influence here with our
Hmm?
data and insight creation on the ESG side of companies. Um, I, I joined a buy side team that had started to define itself a little bit around ESG and what was then called SRI, right? Socially responsible
Hmm?
investing, and really built up a lot of the processes there, everything from kind of trade rationales and compliance, the ESG component of it, to marketing and talking to clients about what we were doing and how it could align with what they and their families cared about. Um, that the asset manager side also went through a lot of consolidation, maybe
Hmm?
5 or 10 years ago, right? So many of these boutique ESG, SRI asset managers were bought up by large mainstream asset managers. So there's very few independent names anymore. Calver's owned by Eaton Vance, et cetera, right? There's quite a few. I think Parnassus might be the only standalone, unless that one also was acquired. I
Hmm?
think it was actually. So on the passive side as well, right? Appear was bought by BlackRock, et cetera. Um, I then joined one of the first venture-backed private benefit corporations, also creating ESG customized investment products, first for individuals and then for kind of the mass affluent via financial advisors. So got some real like product operational experience at a venture-backed startup, still kind of creating investment products, which was really interesting. And then rolled off with the pandemic. To work as an independent consultant with venture GPs and their portfolio companies, as well as some lower middle market private equity GPs and their portfolio companies on what ESG and sustainability meant for those companies. And you probably will not be, but I was surprised to learn just how much those venture and PE GPs look like startups because they basically are, right? They're
Right.
pretty sometimes immature companies, and I don't mean that in a derogatory way, right? They're simple, but haven't always thought about their own practices. So that was really interesting, like really neat to be able to dig in and see how early you can influence companies. What's the right level of ESG you can like layer into a 20-person services company versus a 200-person one. Sometimes how it's really just about who's at the top, and very often like tone from the top is one of the most important factors in terms of the how a company
Hmm?
operates.
It really
And
drives
then
culture. It really drives culture.
Yeah, absolutely. Yeah. So having been through quite a few acquisitions and mergers myself, and seeing a lot of these companies growing and how they were building, really made me interested in this, like in the transaction side of it. I did a little bit of work with a firm working mostly outside of the US, a boutique sell side firm that did a couple of big sustainability deals and brought me on as a consultant to kind of help them on that side because they're less familiar with sustainability. And then decided to roll off and partner with my partners, so Wesley Newberg and Will Bauer, Will, who's a career investment banker, Wesley, who's an exited software entrepreneur, who turned himself into a climate tech venture capitalist. So between the three of us, we cover a lot of ground, and have great networks to kind of make this all happen. So a lot of what drives me and us is really the kind of next step, right? Exactly what you alluded to earlier, that there's a lot of, I think, deserved hype and excitement about the beginning. But we know that many of these companies don't land, or they don't IPO clearly. Acquisition and M&A is by and large a very good outcome for many of these companies, which I think makes a lot of sense, right? It doesn't always make sense to IPO. And someone has to help make that happen. So we think that particularly in climate, there's a lot of companies that have figured something out, right? They have a business model that works, but it's not at the right scale. They have a really interesting tech, but they're like trudging through the 18-month process to work with some large corporate or government. Venture isn't made for that kind of setting, right? Or it's tough. So we feel like a lot of our work is accelerating the distribution and impact of climate solutions and business models, because we don't have time. Like the planet doesn't have time for us to figure it out in the space of a quote unquote normal business cycle, especially not with this new administration that's really blocking things up a lot.
Yeah. And what's really another thing that's really interesting is the fact that you put your head down to build something. Founders look up and say, did I build what I thought I needed, or did I build what the market needed? But they may not see, nobody can see all of the market. Nobody can see all the different opportunities, and whether they need to pivot a little bit or whether they just need to think about who they might sell to. When they have the exit, they then have the ability to go back and do it again. And I've seen a number of founders who've gone back and they built the same thing over and over again.
Better
iterations of it, because they know how to solve that problem and they know how to do it faster. So the first exit is when you see people have multiple exits, it's like a stair step along their journey of being a builder. So I think people sometimes think about exit out or non-IPO exit fail, but it's not necessarily the case. And opening up their view to understanding that there's different ways out there to get to the goal. And it's all about the journey, not so much the destination.
Absolutely.
That's a real win for them.
Yeah, I'm glad you brought that up. I think this is a nice plus if we can get it, but certainly part of what we hope will happen with our clients is that they achieve some element of personal wealth and comfort in a way that allows them to take a lot of risk again, if they so choose, and either fund other innovators or do it themselves, or often both.
Yeah.
We think that's a positive outcome, frankly, of what we can help with. And to your point, we certainly see that happening.
And it is, and if that resonates with someone who's hearing this message, they're like, you're our kind of founder, the kind of people that we want to work with, because they want to build something, they want to create something of value, and then build something else and help other people out. So with that, I'll get to my final question, because we could do this forever, and I learn a lot from each other, but I want to make sure we get that landed with everybody else. When, how, and why should someone reach out to you?
Also very glad you asked this question. The answer is almost always earlier than you think. I think as Phil alluded to, well, for us to do our best work, I'll speak from the Rizoma perspective, we think 6 months is good, and that's often longer than folks think. You can, of course, do deals faster. I just think you're cutting corners somewhere. Sometimes that's fine. But sometimes you can't afford to cut corners because your business is in a tough state, or the market's in a really tough position, or there's only really a couple of buyers and you have to play it very carefully. You can't go fast and loose because there's only a few realistic buyers on the other side of the table. So, and we are happy to talk to people kind of at any stage, honestly, because we always learn, right? There are additional data points for us. And Phil, I'm sure you see this, right? The benefit of not being heads down and building our own climate tech company, like our services firm, is that we have a pretty broad view of the market and are always happy to share the intel that we see, the kind of areas of interest that buyers tell us about, the multiples that we're seeing, just to give you more data. So reach out sooner than you think. But ideally, you have at least 6 months of runway. And if not, you're figuring out how to get a little bit more. You have confidence that your investors will fund that last piece. And the way to reach out is come to our website. Right now it's rizoma.ventures. You can find me on LinkedIn and connect with us directly, and then we'll set up a call. We're excited to learn more about your business.
Sure. And as they should be. You guys are great to work with and we're doing some amazing things. Thanks so much for making the time. Really appreciate it and look forward to what's next.
Thanks, Phil.
All right. And we'll see everybody else next time on the next episode of Thruline Thursdays. Talk soon. Bye.